Good morning, everyone. Welcome to the end of the week. It's Friday, October the 17th, 2025. Recording this in the morning as always. Okay, so the big news which sort of filtered through markets, especially US markets, we have to say, there was some sort of echoes, potentially concern about regional banks. And basically, we had, if you look here, what we've got here is the KRE, which is the ETF, which follows the regional banks. And obviously, we had a big fall off yesterday, it's like 5 or 6%. And you're seeing the pre-market still down, trading around the lows here. And of course, this is the big concern here is that this is sort of shades of what happened like a few years ago when we had the problem with the SVB. And basically what we had is that a couple of the banks, Zions and Western Alliance Bank Corporation, they essentially were saying that they were having problems with loans which were associated with fraudulent activity. And you remember there have been some sort of high-profile bankruptcies in the last few days, and also the comments by the head of JP Morgan, Jamie Dimon, probably didn't help the other day because he was asked about some of these bad loans and sort of some of these bankruptcies. And he said, well, if you see a one or two cockroach, you know that you'll probably see some more. And so there was a general tension in the market, sort of awaiting for any news of insolvencies or sort of stress in regional banks. And boom, then we got this announcement by Zions and Western Alliance. And essentially that caused, a pretty, a little bit of risk off in the markets and concern that maybe, we're getting some kind of problems with the credit spreads, SVB. Do we have overall a weaker business environment than we're really seeing? Is the credit quality not as good as it could be? And so that caused a bit of a risk off kind of a flight to quality. So what does that mean? It means that, for example, if we look at the VIX here, let's look at a few of the charts here for the VIX. So first of all, obviously, as you can see for the VIX itself, now remember the VIX reflects what's going on 30 days out. So we've just got a 15-minute chart. Maybe we'll put it actually on a 30-minute chart, give ourselves a little more perspective. So you can see here that the VIX really has been pretty elevated, and it got up to, overnight up to about 29, which is quite elevated. And then if we actually look at some of the other metrics, I like to look at the shape of the curve. And so if you look here at let's say the first and second futures contract, again on a 30-minute chart, you can see here that they got below zero. So normally the VIX likes to rest in contango with the market pricing out risks further into the future, not immediate risks. So anytime the market starts to, the VIX curve in terms of the futures, anytime it starts to flip into neutral and even into backwardation, that is not a good sign. It means the market is starting to panic and basically pricing in stress, in short duration rather than medium or long-term duration. And then you can see here, so this is the VX1 minus VX2 being the VIX futures curve. And you can see that, as it was in Friday, it started to push up obviously on the Trump tweet. And then since then, it's been going, and you see it's gone into positive. So there's zeros is the purple line here, just coming down over the last hour or two. But basically that's, not a good sign. So with that VIX, we also, we saw as well, just interesting, I was noting here, just to keep an eye on things like gold volatility. So look at gold. This is not the gold price. This is volatility. And you see the volatility in gold over the last 5 or 6 days has been ripping higher. So interesting. A lot of this is, potentially people buying calls, piling into that market, pushing up volatility. So it's kind of an interesting one there to see. I mean, again, this is parabolic, and I don't know if this can be sustained or not in gold, but gold vol up. If we look at the move, which is the bond volatility, we can also see that that's pushed up. So volatility across the board are pushing up. So no surprises here that the equities on this risk-off move taken a little bit of a hit here. We can see that the equities, basically taking a hit over the last 24 hours, recovering a little bit this morning. We'll see if this sort of problem with these two regional banks, Zions and Western Alliance, if they don't prove to be long lasting, it's reasonable to think that maybe equities will have a bounce back, and this episode will, I don't know if blow over is the right term, but there's definitely a little bit more nerves in the market. Similar kind of situation here with the Nasdaq coming off. And if we look also at the Russell, you can see that had a pretty heavy down day yesterday. So equities overall, so that's in the US, but let's just have a look at European equities. So let's look at the Euro Stock 600. As you can see, did come off yesterday, but not nearly as much. If anything, it's coming off a bit more today. So there's a little bit of a outperformance of Europe versus the US. If we look at the Euro Stoxx 50, you can see that yesterday actually comparatively was almost like a green day and a lot less of a sell-off. If we look, let's just have a quick look, let's say over at Asia, we'll look at the Shanghai 300. That sold off. But again, it's more today. Yesterday it held up a bit better. And then if we look at, let's look at the Nikkei, if I could find it, there's the Nikkei, not as much of a sell-off. So global equity all selling off and feeling some of the risk off, but definitely a little bit more concentrated over in the US. Now, if we look at a few other markets, we don't have any data. Yesterday, we didn't get retail sales. We didn't get initial jobless claims. I saw some sort of private data. Some of the big banks like Goldman Sachs, JP Morgan, they're starting to put out some of their own estimates of initial jobless claims. I saw a number, I think it was yesterday afternoon, of about 217,000, I think, from Goldman's. So again, fairly solid labor market. We had a lot of Fed speakers yesterday. Miran was obviously very dovish, calling for 50 basis points of cuts. Others a little bit more circumspect. So I think the market's in a comfortable place at the moment, pricing about 52, 53 basis points of cuts by the end of the year. So not a huge amount of a change, but definitely the front end yesterday, the bonds having a nice day on that risk off. So see here the ZT, so the 2-year pushing up, just giving back a little bit at this overhead resistance. If we look at the 10-year, also pushing up yesterday, and also the 30-year, not quite as much, but still pushing up quite a lot. So overall, it was a risk-off day. Again, the market will want to be looking at the earnings, especially of the regional banks, just to see if there's any contagion, any sense that the credit quality is, sort of underperforming and having problems. So if we just look at credit as well, let's look at the investment grade credit. And you can see here yesterday we had a nice green candle. So this is investment grade, so-called good quality. Now, if we look at, let's say, the JNK or the high yield, you can see a clear divergence there. So you can see that, the high yield credit. And so credit spreads going out a little bit. And this is just, this is part of this narrative of maybe other sort of cracks in the US system. There's been a lot of talk about liquidity. It does seem that the bank reserves are sort of definitely dwindling down, so less liquidity in the system. So all of this is contributing to pressure on equities. If we look over at actually that's why we've got oil here. Let's have another look at oil as well. So if we look at oil, you can see here just a pretty heavy a price action. What I would draw your attention to is you see this Fibonacci here, this sort of measured move extension here. We are at the extremes of that, and you can see here we also have a bit of support around about 55, looks like about 85. This level here, down here is actually, in fact, that's such a lovely level. I will immediately just pop that on my chart as a reference. That's pretty good there. As you can see, we're sort of in that range, just around about there. And just coming off that. So I just wonder if oil will start to stabilize here. I mean, there are some negatives for oil, apart from this uncertainty about the global economy. We had a positive sort of sentiment coming out of a Trump-Putin phone call yesterday. Apparently, they're going to meet in Budapest in 10 or 12 days to talk potentially about the beginning of the end, maybe of the war in Ukraine, potential truce, ceasefire. Who knows? That's a very complex situation. Nonetheless, that positive sentiment is not good for oil. The idea being here that if there's a peace settlement in any shape or form, Russian oil will be less sanctioned, therefore more Russian oil flowing more smoothly into the international market. So that's a negative for oil. Also, we had the API private inventory number on Wednesday afternoon, and then yesterday we had the official US number. Both of them had quite big builds in the crude, not so bad in gasoline, but in the crude we had big builds. So again, inventory starting to sort of ramp up. And a lot of people, when I say people, a lot of organizations and research shops are talking about increasing surplus and rising inventories, especially as we go into 2026. So just structurally, oil under pressure here. Now the question here is this going to be some kind of bottom? That's certainly a nice level to sort of base, but the price action at this point is still very negative. And if we just throw in, let's say, a couple of basic, moving averages, let's say like just, 20s, 50s, 100 and 200, you can see here that we're well below the 100 and the 200, and the 20 and the 50 are also, pointing in a negative direction. So oil trading heavy. That's also not great for the US dollar. Yesterday we had that political, we had the risk of the banks. That's not great for the US dollar. And of course, we had yields coming down quite a lot as well. So if we look at before we actually look at the dollar and some of the other currencies, let's just look at some of these. If I could find them, some of the differentials here. Let's say, for example, we saw we saw a steepening, obviously, of the curve, just as more Fed dovishness was priced in. But I really want to look at the differentials here. So if we look at U.S. versus Germany, you can see here, that there's sort of a quite low levels here. If you look at on the 5 year, you see that that fell yesterday, so it's still trading along the lows here. So these lowish, these are low differentials are not favoring the US dollar either. So if we look here, and we could see yesterday what happened, we got a pretty classic, a safe haven bid here. You see the US dollar against the Swiss franc. This is on the spot. You can see it's come off. It's come back a little bit, but you see basically last 2 or 3 days, the Swiss franc has rallied against the dollar, or you could say the dollar has fell against the Swiss franc. So again, coming down towards the support levels here. Similar kind of situation with the USD yen. You can see here that again coming back up the US dollar this morning. But basically over the last 2 or 3 days, US dollar showing some weakness. So those safe havens are doing pretty well against the US dollar. On the other hand, the more risk currencies like something like the Aussie, you can see hasn't fallen as much. If we look at New Zealand, the Kiwi actually up against pretty stable as well. So really, it's the safe havens doing quite well. In the middle of all that, you have Europe, which has been doing well again, just with the sort of risk off tone, but again coming into a fairly strong resistance band, as you can see, around about 1.17, 117. So it'll be interesting to see if the euro has a bit more room up there or just consolidates for a little bit. The euro is a little bit idiosyncratic. We also had in France, there's been some political sort of instability. The Le Cornu government part two, he was reappointed by Macron. He survived a couple of no confidence votes in the French Parliament. So that's giving a little bit of a risk on boost to Europe. And essentially, Le Cornu, what has he done? He's basically swapped political stability. He's decided that he prefers political stability rather than fiscal or reform. And therefore, the Macron's pet project, which is to reform the pensions to make them less generous and get France's deficit a bit more under control, that's essentially been shelved until 2026. It's been put in the too hard basket. And because of that, the socialists on the left have essentially come on board and decided for the time being to support Le Cornu's government. So that all that to say that that's quite good for sort of let's call it political stability. Maybe it's horrible for fiscal discipline, but it's good for political stability in Europe. And at the margin, that's a positive for the euro. So the euro are quite happy in this environment. If we actually just look at that, interesting. Always just like to look at the spreads here. So if we look at the French German spread, you can see, well, it's come up, as I say, that a couple of points, but basically it's been coming down over the last few days. So just that situation there, stabilizing as in France, unless there's maybe some headline I've just missed, but basically stabilizing quite a lot. Apart from that, we do have American Express today. We have the earnings. The other banks have been pretty solid. American Express will be looked at just this K-shaped economy. American Express sort of customers are normally a little, how can I say, wealthier, earning more, bigger spenders. So assuming that's going to be quite strong, but it's always going to be interesting to see the commentary from American Express on the state of, let's say, at least the middle class consumer. Apart from that, our dear old friend gold has collapsed. No, it hasn't collapsed. Let's have a look. Gold. That's just interesting here because there's my level there at about the 43.50 level, which basically the reason I had that on is just as a sort of a fib extension. Let's just put it onto just want to put it onto something else and show you because that's because at this point the market is trading quite technically, and that's the 1.6 fib extension. I think do I have it on this chart or maybe this chart? I put on a chart yesterday, but basically, if you look, I have to find where did I anchor that? Let's have a look. I think if you anchor that, yeah, you can see that if you look at various fib extensions, this does, and if you go to a longer term fib extension as well, which maybe we can do something maybe like this one. Oh, no, that's not the right one. That's too old. But basically, if you look at some of the fib extensions, this level up here is quite an interesting one, the 43.50. And if you consider that like maybe a lot of algos might be profit taking there and stuff, it wouldn't surprise me if we do get a little bit of a pullback because this has been, a little bit on the ridiculous side, gold. But nonetheless, the macro factors still remain in place. So at this point, it's technically, obviously, very, very overextended. Is this going to collapse? Probably not. But could we get a little bit of backfilling here and a little bit of sideways consolidation? Absolutely reasonable. Similar situation in silver. Again, just taking a little bit of a pause, although it's still a very, very bullish chart. That's the point. Like it's all very well to talk about it being silly and overextended, but at the end of the day, moving averages are still pointing higher as they are with gold. Is it overextended? Sure, but as we all know, things can keep on rallying until and unless the market tells us otherwise. On the other hand, copper has taken a little bit of a hit. That risk-off sentiment yesterday definitely hitting the copper market. There's obviously still sort of tensions between China and the US, although my reading of the situation is that there's quite a lot of posturing. There's a tit for tat. There's some public commentary. I think behind the scenes, both of these superpowers understand that they can't afford a complete, disastrous trade war. There's been a lot of talk that, Trump's Achilles heel is the stock market. The Chinese are trying to tank that. They're kind of trying to put pressure on the stock market in some way to tank it so that Trump will give concessions. Sure, maybe that's possible. There's probably dirty tricks happening. But at the end of the day, China is definitely dependent on the US in terms of the treasury, its treasury holdings, and also in terms of its export market. It's important. It's a very I won't get into it, but it's very interrelated sort of economies, and obviously the US needs a lot of things from China. So let's just assume that that's going to be ironed out, in a sort of a bumpy way. But the point is that's making it a little bit hard for sort of copper to rally here. And obviously the specific risk off tone yesterday, copper took a little bit of a beating, so to speak, especially compared to, let's say, gold and silver. But it seems to have recovered a little bit. And it seems as though this morning, it's going to be quite an interesting trading session because we've got the option expiry. It's a Friday, October the 17th. So there could be more volatility, but it will be interesting just to see, how these equities perform, especially in the US. We see that they came down, but now they're sort of pushing back up. If they cannot sustain this rally, I think another downdraft is definitely possible. So it's going to be quite a key trading session today to see whether that was just a bad dream and that fears about the regional banks were overblown and we can go and retest the highs, or if indeed we do see that the markets cannot regain these sort of earlier levels, then definitely a retest lower is possible. Okay, guys, I'll leave it there. Have a great weekend, and I'll continue this next week. But in the meantime, have a great trading day. Thank you. Goodbye.